Hello, my name is Vitor, and I'm going to present an analysis comparing recent investments of FC Barcelona and Real Madrid. Before I dive into the analysis, I'd like to give you some more context into the situation of these two clubs. They are some of the biggest clubs in the world, and their rivalry is huge, probably the biggest in the world. They're both member owned clubs, which mean there are no shareholders or owners. They both recently renovated their stadiums. Real Madrid started in 2019 and Barcelona started in 2024, and Real Madrid ended their renovation in 2024, and Barcelona is expected to end theirs by 2028. Additionally, FC Barcelona also went through a major financial crisis during the COVID pandemic, which even led to them having to lay out their best and most historic player of the entire history of the club, Lionel Messi. This analysis was targeting at answering two main questions. The first one was who had the best return on investment from soccer personnel expenses. So think about players' salaries, coaches' salaries, expenses for purchasing players from other clubs, so all of that. And the second question is who benefited the most from renovating their stadiums. The results was that the best financial and sports return from personal expenses recently has been Barcelona, and that the best stadium renovation project was Real Madrid's. Diving deeper into recent financial and performance returns from soccer expenses, Barcelona has been increasing in performance and Real Madrid has been decreasing. As you can see from the chart on the left, that shows the prize money over the personnel expenses in the 3-year time frame. Prize money is the money that the clubs get from performing well in competitions and winning trophies. One thing I'd like to highlight is that even though Barcelona won the La Liga in 22-23, it was their last year of clearing out very high expenses. So in this year, their soccer personnel expenses was higher than 590 million euros, while their second largest year in expenses was below 450 million. So this was outrageous and they were getting out of their financial crisis. And that's why they started to improve. Real Madrid, on the other hand, started to spend more and more, partially because of signing Kylian Mbappe, which was a major salary, and their performance in the field not necessarily kept up with their investments. Now, going into the stadium renovations, Real Madrid was judged as the one doing the best renovation project. And some key metrics to analyze that was the payback period, the NPV, and revenue and incremental revenue relative to the true cost. Now, let me explain a little bit more of those numbers. As you can see, Real Madrid has a lower payback period. And what that means is that from the revenue that the stadium is generating, they'll be able to pay off the cost quicker. Bar in the NPV, that is relativizing their revenue, is putting their expected revenues of future cash flows relative to their weighted average cost of capital. And the weighted average cost of capital of Real Madrid is significantly lower than Barcelona's for two main reasons. The first one being that Real Madrid built their stadium earlier. So when interest rates in Spain were much lower, so they were able to raise debt at lower interest rates. The second one being that they raised less debt than Barcelona did. So they paid some of the purchase price only with their money that they generate from the club operating. Now, the revenue and incremental revenue, the difference between these two is that the revenue is how much the stadium is expected to generate on a yearly basis. The incremental revenue is how much more the renovated stadium will generate compared to the old stadium. And the true cost was simply a summing the financing cost plus the project cost plus how much revenue they lost during the renovation period because they had to move to smaller stadiums where their stadium revenue was much smaller. One factor that helps Real Madrid in the true cost factor is that Real Madrid did their renovations during the pandemic, so no clubs were getting any revenue from stadiums, and meanwhile they were renovating their stadium. So they benefited from that, and as you can see, they have a higher revenue per cost and also higher incremental revenue. So finally, the conclusion is that Barcelona has been doing better investments in the short term, especially related to the sports metrics, while Real Madrid had the opportunity to do a better long-term investment, especially because of its long-term financial stability. Real Madrid had a lower interest rate in its debt, resulting in a lower overall cost of capital. And another factor that played into that was that because they were much more stable as a institution, institutions were willing to lend them money at much lower interest rates than Barcelona that started their renovation projects coming out of a financial crisis. So institutions, when they were to lend money to Barcelona, they would put much higher interest rates because the risk was much higher. Thank you for watching, and if you want to stick out for a little bit longer, I'll be showing the Power BI interactive dashboard that I built to explore the financial ROI and the sports ROI under different assumptions and scenarios where competition are weighted differently and show the financials in a little bit more of detail. Thank you for watching.